The fundamental question that they just asked was, Jay Powell today, the minutes sort of suggest we're locked in for September for a rate move. So does Chairman Powell need to say anything today, or can the bond traders who are not in the Hamptons, leave by noon?
Well, look, the case for raising interest rates, I think, is pretty compelling. We have an economy that's growing above trend. We have low unemployment, and we have inflation at basically our goal of 2%. So we've been trying to engineer, calibrate our policy path to the economy, and so this gradual increase in rates seems to be a very compelling case right now, given that we are accommodative still on monetary policy.
Well, you think the market gets that? The chairman doesn't need to steer us in any direction?
Well, the chairman will give his speech today, and I think he's going to be talking about some longer-run issues as well as perhaps short-run issues, and I'm looking forward to hearing his speech as well.
You think in September you go ahead and drop the accommodative statement from your statement, the accommodative sentence, end forward guidance?
So in the minutes mentioned that we're thinking about how we want to change the statement. We look at the statement every time to make sure that we're being transparent about our views on policy and sort of give an indication of where policy is going. Now, we're in a situation now where, we are data dependent, as we've been, and we want to be as transparent as we can where we think policy is going. But we also want people to understand that we don't lock ourselves into something. We want to react to how the data comes in and where the economy is going. So again, we want our statements to be transparent in that sense so that people aren't misled.
Well, I wonder if the markets completely get the message, and the reason I ask that is the yield curve being so flat, and a lot of people predicting it's going to invert. You're about 100 basis points below where the median terminal rate would be based on your latest forecast. So if you're going to keep raising rates to that point and the yield curve is this flat, does that suggest that markets aren't getting your message, or that they fundamentally disagree with your assessment of the economy?
Well, I think the yield curve is certainly something we look at, the slope of the yield curve. I think there's reasons to think that it may not be signaling the same as it has in the past. As you know, an inverted yield curve is usually correlated with an economy going into a recession, but there's reason that the long end is depressed now for other reasons. In particular, there's demand for safe assets, so flight to quality into the U.S. Treasury market, and also QE around the world. A lot of central banks have used the long end. In the U.S., we bought long-term assets, and that put downward pressure on the long end. So the signal that you take from the yield curve now is different than it has been in the past.